Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. So we've got lots to look forward to in the coming week. A trove of data as well as the jobs report at the end of the week. So we've got earnings on the table and also Donald Trump talking about cryptocurrencies and of course his tariffs against Mexico and Canada will be kicking in tomorrow. To help us navigate the days ahead, we've got Shane Oliver. He is the Head of Investment Strategy and Chief Economist at AMP Capital. Good morning, Shane. How are you doing today?
I'm good, Ryan. Hope you are too.
I'm doing well, and always great to have you on, Shane. We've got lots to unpack, and let's start first with what Donald Trump has lined up. And this is what he dubs a strategic reserve for cryptocurrencies. Walk us through what's the thinking here, and what are you taking away from this move?
Well, to be honest with you, I think it's illogical. I can't see why a government would need a strategic reserve of cryptocurrencies. You need a strategic reserve of things that maybe you'll run out of in payments crises or in things like oil. You know, it's common that the US and some other countries have a strategic petroleum reserve. But that's not the case with crypto. Why would they actually need it? I think all this is just done is smoke and mirrors trick appeasing the crypto crowd. I don't really see a lot of logic behind it. But anyway, that's what's happening, and I guess we have to go along with it.
Yeah, it's leaving analysts and legal experts divided on what's going on. And Donald Trump says he wants to make sure the U.S. is the crypto capital of the world. And of course, worth noting, he has launched his own coin. Melania Trump also has her own coin, so he is quite pro-crypto in that sense. Now, talking about what else is on the table when it comes to Donald Trump, we've got tariffs kicking in for Mexico and Canada tomorrow. How is this going to affect markets?
Well, I think it's going to cause ongoing volatility. I mean, there's some aspects of Trump's policies which make a lot of sense from a purely economic rationalist point of view. You know, the sort of almost like Ronald Reagan policies, deregulation and tax cuts, smaller government. Those things could add to productivity and reinvigorate the US economy, although it's doing pretty well anyway, or has been doing pretty well until recently. But the problem is that in the process, we're seeing a lot of erratic policy making. The tariffs are causing huge uncertainty. If you're a US producer, you don't know where to set up your factories, you don't know how long the tariffs will be for, whether you should leave your factories where they are, or there's all sorts of uncertainties. That is going to delay investment in the US. There's also the issues about retaliation, which will add to uncertainty. And of course, there's an impact on US consumers as they pay more for products that as their price goes up in response to the tariff. It's not great from an economic point of view. There's also concern that the erratic policy making coming out of Washington, whether it's the crazy TV show with Zelensky on Saturday or whatever it is, this just creates uncertainty as well. The deregulation that Doge is going through, or Doge or Dogie, or what do you want to call it, is also creating a lot of confusion people don't know whether they're going to get paid their government services or not. So all sorts of uncertainties around this. And I think this is starting to weigh on the US economy. We're seeing lower consumer confidence and lower business conditions. And that's an economy which so far, for the last couple of years, despite all the fears about higher interest rates and inflation causing a recession, managed to avoid that. Now there's an increasing risk around the US economy because of the erratic policy making we're seeing coming out of the US. So unfortunately, it probably means more volatility. Now I hope at some point Donald Trump says, well, we're getting a bit of a backlash from voters here. We've got elections coming up. I think there's some in Virginia, and next year the midterm. Share markets are down. Then you could see some backtracking like we did in 2019. We saw the tariff uncertainty in 2018, and then in 2019 things started to settle down a bit. So hopefully that's what will happen, and this doesn't go on for the next almost 4 years. For the immediate future, here and now, I think we're going to see more volatility.
Yeah, lots of uncertainty when it comes to how tariffs could hit the markets. And also China is trying to figure out what to do in terms of responses. And we do have some speculation that the tariffs, the economic pressure from the US tariffs on China could force it to maybe change its current policy and bring out a bigger bazooka of stimulus measures. Do you think that's a likely scenario?
Well, I think it probably is. One thing that needs to happen in China is a greater reorientation towards consumer spending. As any economy gets wealthier and bigger, it changes. You move from industrialisation, then growth of the services sector, and then more focus on the consumer, and the consumer becomes a bigger part of the economy. So a lot of the development in China over the last 20, 30 years, since the great opening up in the late 70s, in fact, has come from first the industrialisation. A lot of that was export-oriented, and of course the property market as people move from rural areas into the cities. Those things have sort of largely run their course. The trade strategy is getting harder as countries put barriers up against Chinese exports to some degree, notably the US, and this means that you need a change of tack eventually, and I think there is scope there to stimulate consumer spending. But of course the authorities in China probably want to get a better handle on what they're up against with Donald Trump, and that's why they haven't rushed in just yet. But I do think that if these tariffs continue to ramp up, Trump is talking about another 10% tariff on the initial 10%, which of course is on top of roughly a 10% increase in tariffs that he put in place in 2018 and 2019. So, a lot of extra tariffs going in on China. I think if you had them all up, you're looking at around 30 percentage points. Once the Chinese, I think, are more confident with what they're up against, or got a better idea as to what they're up against, what the end point might be, then I think we'll probably see more stimulus coming through. At the moment, the Chinese are probably happy that things aren't too bad. Growth is meandering along somewhere just below 5% or around the 5% level. Property indicators we saw last week, house prices still falling, but only just, as if the worst may be over in terms of the property market. Bit early to tell on that one, but that could be a positive sign. So that's why I think the authorities aren't rushing. They're just waiting to see what happens here coming out of the US.
Yep, great overview of what to expect. And of course, we are looking forward to the annual 2 sessions that kicks off tomorrow in Beijing. So we could be seeing some announcements on that front. We've been in conversation with Shane Oliver. He's the Head of Investment Strategy and Chief Economist at AMP Capital. Shane, thanks so much for your time and insights this morning.
My pleasure, Ryan. Great to be here.
Always great having you on, Shane. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.